Couple of other stocks, Oberoi Realty looking pretty good as far as the numbers are concerned. But Cholamandalam Finance is the other stock that we're looking at. If you remember, a couple of days ago, the company reported a very robust third quarter earnings. It's clocked in its highest ever quarterly profit, and the sequential loan growth has come in at a 26 quarter high. Arul Selvan D, the President and CFO of Chola Finance, joins us now on the show. Arul Selvan, thanks a lot for joining in. Is this a performance that is sustainable, the kind of loan growth that you did in the quarter gone by? And now that things are picking up, tell us about the segments where you see a big up move coming from, and what is the kind of loan growth that you can generate in FY24?
Yeah, thank you for the call and for this interview. We are looking at a good growth in the current, the final quarter, which is the JFM quarter now, as well as in FY24. As you know, our primary focus is on vehicle finance. We have the second loan against property and HL. All these are clocking good growth. We have also introduced 3 new products. Again, they are showing good traction, especially in the CSEL and SME segment. So we see good demand pickup happening across the board. While we have not focused or we are keeping still a little low profile on the heavy commercial vehicle, which is which is more addressed by the banks because of the fleet operators being there. The rest of the segments in the vehicle finance, loan against property, HL, as well as the consumer and small enterprise business, which you have started recently, and the SME business, will all show good traction as we move into the financial year. The new businesses, we will take it with a little bit of a caution as we go through certain life cycles in these businesses. So the scale up will be little slow, but because the base is low, the scale up looks very high.
So what did you say about the heavy commercial vehicles? You said that is looked after by the bank. So are you seeing that pocket slow down for you? Is that the right way to look at it?
See, we have always been a little slow in the heavy commercial because heavy commercial vehicle is more, dominated by fleet operators. And the fleet operators are mostly serviced by banks because their yield expectations are very fine and they buy it in bulk. So the ticket sizes attract the banks as well as they can afford to provide them the yield they are looking for. We do heavy commercials only in what we call as the secondary, fleet operators or the individual transport operators, the small road transport operator types, where the owners own less than 10 vehicle types at any point in time. So that segment is still not picking up. They are more focused on buying used vehicles. So that's where the heavies we are not at, scaling up significantly, but it will move progressively into it. But across all segments, including heavies, our market share has grown.
Okay, all right. Good morning, Mr. Arul Selvan, and congratulations, sir, on a very, very good showing. I think there was a consensus beat is what we saw, so good on that. But what's the way ahead? If you could tell us, putting all the factors that you put on board, what is the AUM growth you're factoring in? Maybe what you end this year with, as well as the next year. The other important factor is NIMs. How are they likely to shape up in a rising cost scenario? Can you hold on to the numbers that you have delivered? Go ahead.
Yeah, see, as you would have seen, we have grown the AUM YTD December at to the extent of around 31%. I expect the Q4 should, keep it at that level, around that level. So 30% plus is what we will close the year with on the AUM front. The FY24, we because the base is lower. As you know, the last year, FY22 was actually a 9-month because the first quarter was not a great performance because of COVID-2. So that's where the 31% growth seems to be very high. But as we move into next year, the growth year on year, because it will be a 12-month versus a 12-month comparison. So you will have, my expectation is it should be in the range of around 22 to 25% on the AUM growth next year. Coming to the NIMs, NIM will have a slight bit of impact because of the rising cost of funds, but we are addressing it by increasing the yields wherever it is possible, especially in the floating rate books, which is the loan against property and the HL, where we have done the yield adjustments for entire book. And on the fixed rate book, which is the vehicle finance book, we are doing it on the marginal yield on the new loans that are booked. So to that extent, on the existing book of vehicle finance, there could be some impact of on the NIM. But I think that would be more than sufficiently compensated by reduction in net credit losses, because now the borrower's earning potential has substantially stabilized, and so they are returning back the monies, and overdue collections have been quite robust, and our overdues or delinquencies have been continuously coming down, and I'm sure we will be able to
What is
bring
the
it
number,
below
sir,
the
you could give
pre-COVID
us?
levels.
What is the number you could give us in terms of NIMs?
On the NIM, we should be in the should be at around 7% on the average assets.
7%.
Okay, all right. 7% on an average is what you're looking at. And you said your delinquencies have come down in a big way. Can you quantify that for us? What has it been in the quarter gone by? Just to get an understanding of how much things have improved as far as, the asset quality is concerned as well.
See, the 90 plus, what we term as stage 3 under the Ind AS, is now at the end of December is at 3.5%, which was at 3.84 in September 2022, and at above 4% in the previous year. So this has been continuously coming down. If you go back and see the quarter 1 of last year, immediately after COVID-2, it was as high as 6.5%. So from there, it had been progressively coming down, and we have kept brought it down to 3.5. Not only stage 3, which is 90 plus, even stage 2, which is anything above 30 plus, has come down substantially. And these are given us a good traction with regard to keeping our NCLs in control, especially in Q3. If you see, the NCLs have come down. We had a certain amount of higher losses in Q1 and Q2 because we had to repossess and sell assets. Comparatively, Q3 is a good quarter, and we expect it to improve in Q4 as we move to close the year.
Okay. I understand that Credit B, which is your app, has been banned by the Ministry of Telecom, and this app had about 10% of your new business coming in for you. Has it hit your business in a way after the app was banned?
No, it is not 10% of all our new businesses. It is 10% of the CSEL business, which by itself is, less than 3% of the total business. So it is one of the new businesses. We had one element of one of the fintech partnership. So if you look at the CSEL business, it has got two segments, which is the partnership business, and then we also have the traditional business where we do sourcing and collection on our own. The proportion between these two are also like 1:2. That is that fintech related business is 1%, and one time, and the traditional business does twice the turnover of that. And CSEL business by itself is around 3.5% of the overall AUM. So yes, there is a thing, but we are, people are taking up with
Mr. Arul Selvan, what exactly is the CSEL business, if you could explain?
That's the consumer and small enterprise business. This is a new business we started recently. Yeah.
Okay, so 10% of the CSEL business is contributed by the app, which is a very small
Not
portion.
even 10% of CSEL business, madam. Yes. It is 1/3, 10% of 1/3 of CSEL business. So this is actually a very minuscule part of the total business. But yes, it's a good relationship, and we would like to bring it back. Okay. Everybody's working towards getting that down.
All right, very quickly, sir, the new loans part of the business, that's been scaling very, very well. It's unlike actually the group strategy in the past. Where do you see this move as a percentage of your total book? Point number one. And also, how confident are you on the quality of this new business? No worries are there, right?
No, see, new businesses right now is around 7% of the total AUM as we closed December. In this actually SME business we have been already doing, but we have been doing it more with regard to our Murugappa Group related vendors and customers, so there would been a little bit more comfort. Now we are spreading out to do that with other vendors, other borrowers. So to that extent, having experienced it, we are now experimenting it with other companies. We will right now they are doing extremely well, but initially when we are doing smaller volumes, NCLs will be absolutely negligible. Today there is absolutely no NCL on CSL business and the SBPL business as well as the SME business. But as we grow, there will be some amount of NCL we will certainly see in these businesses, but the yields under these businesses are very high. So we are sure that these businesses will remain and will be ROA accretive to the overall company, and that's where we are moving in to grow these businesses.
Okay, all right. We appreciate speaking with you. Thank you so much, Mr. Selvan, for speaking to CNBC TV 18, and all the best. It's been a very good quarter for you, and you're guiding for more than 30% AUM growth. I'm sure that's going to make your shareholders very proud. Thanks a lot for joining in.
Thank you. Thank you.
Okay, that's one of the strongest stocks in the NBFC space, and very strong guidance coming in from the company as well. But let's move on. Here's some